All right, happy Tuesday. Welcome to the Hidden Monkey Golden Gecko Daily Update. I'm going to cover, again, you don't have to worry about if you missed older videos. I'll try to always recapture the same theme from everyone as we go along to make it easier for new people. Okay, so um, real quick, today's market, I'll do it real quickly because it was just pretty simple, but it was a nice pop in the vol. I'm going to zoom in right here. Okay, take a look at this. Today the market shot up. Where are we? Right here, 1.98% today. It shot up about 37.2 on the SPX. That is on the SPY, it shot up about 3.77 ticks today. Points. It was just unbelievable. But here's what I really want you to pay attention to. 1, 2, 3, 4. It took only for 4 days for IV rank to go from 100 down to 36. Okay, 4 days. That's how fast this volatility collapsed. Okay, now look how long it took to go up, though, right? From here, right, around 30. It took 1, 2, 3, 4. It took only 4 days to get up to 100, 4 days to come back. Okay, so that's what I mean. Where when you need to take advantage of these high IV rank periods, because when you sell premium up here, it's hard to get hurt. Okay, because once it's at 100% and this thing collapses, oh my gosh! In fact, even if you sold a straddle right here, you know what I mean? You might be okay, depending how much you could have received. But a golden gecko, for sure, you're sitting pretty. It's just unbelievable. Now, remember why I said it's really important to sell IV rank high? I'm gonna scroll back to February of this year. Okay, take a look at February of this year. Here we go. Okay, look what happened at February of this year. Look, right here on February 5th, on February 3rd, IV rank was at 100%. It got to 100% on February 3rd. Look how long did it stay up there? Only 1 day. Okay? Came back up a little bit and the very next day. So it went from 100% down to 30 something in about, okay, when was 100%? Right here. 1 day, 2 days, 3 days, 4 days. Yep, around 45 days. And IV rank collapsed. Okay, so it took a week. So you got to take advantage of those of when it gets high IV rank. And I'm talking about the SPY. Other things could stay up, but SPY represents such a broad market. It doesn't pop very high to 100. In fact, that's the only time it popped to 100. It only popped to 100 once this year. In the last 52 weeks, only once, and that was February 3rd. It did it again. It hit it twice this time, though. It hit up. What happened was it popped up to 100 on October 13th, came down the next day, and then popped up again. And then it's been down ever since. So my golden gecko puts are nice. If you've been following me along, you know that I had a 185 put spread and a 190 put spread that expires at the end of this month on the weekly. So I'll show you that too. All right, let's look at the chart. How do you read this chart? See when this bar is yellow like this? That means IV rank is in between 25 and 50. Okay? When this bar is red, that means IV rank is below 25. When this bar right here is green, it's above 50. All right. So as you can see, IV rank is collapsing right here. Also, take a look here. This is your all BV cross. I don't use technicals to make my trades. I just do this so I can kind of see what's going on. It just gives me some context. All right. Tom doesn't like technicals, but if you're gonna have a bias, you gotta base your bias on something. The reason why I want to show this out, if this goes green, if this can cross above its 30-day average, and if this goes green, and take a look at your slow stochastic 50 over here. If this gets to 50 and turns green, that's a very bullish signal. Okay? In fact, I'm going to try to zoom in here a little bit. All right? Okay, so I'm zooming in. Okay, so if this goes green and this goes green at the same time, that's a bullish signal. Look for the market to climb back to the old highs up here. All right? And then what's going to happen with IV rank, it's going to stay low and kind of hover around this 15 to 12 or 12 to 15 area like it did. And just to prove my point, look at what happened right here. Okay? On balance volume, look, IV rank was at 25, okay? This went green, this was still red. Then over here went green, this is red, right? And finally over here, this is green and this is green. Look what IV rank is below 25, and look what happened to the market. It climbed, climbed higher, right? IV rank stayed relatively low, and it still climbed high, okay? And that's kind of what happened there, and then it petered off. But it, you know what I mean? So um, that's pretty much the gist of what's been happening. Let's take a look at what happened back in February. Same pattern, all right? Here's what happened back in February. Let me zoom in over here real quick so you can see. Look, right? Market took a hit all the way down here, right? IV rank was high. Look what happened. On balance volume hit green. Slow stochastic cross 50 here, went green here, right? And it went from a high, it went from 180.88 and it shot up as high as I don't know, what is this? That can't be right here. Where am I? Oh, yeah, here. Shot as high as 188 here. I'm sorry, 182.01 here, up to 188, 189 up here. And if you follow along, right, that just kind of gave me my trend, right? It was a bullish trend. Okay, so why am I telling you guys that? Well, it might be a good idea if you can collect. The only problem is IV rank. Yeah, you could do it here. If you'll be a little ahead of the game. You could sell some puts here or a golden gecko maybe, but you might want to skew it to the upside, especially if this goes green. Okay, so let's take a look at my positions real quick on Dory. Let me show you what I mean on how to do a golden gecko. Repetition is the mother of all learning. So what I'm going to do is I'm going to go to a trade page, and I'm going to click on SPY up here. And you know what? I'm going to clear. These are all my positions. But let me clear it so that you can see kind of what it looks like, what your screen would look like. I'm going to go to settings, and I'm going to take off these positions right here, and they'll go away. Okay, so this is probably what your page would look like if you don't have any positions on. So let me show you what this looks like. When you type in SPY here, this is what will come up. This is your one standard deviation lines right here. Okay, the top half of the screen is where you place things if you want to buy something. The bottom half of the screen is where you're going to place your trades when you sell something. So you're going to sell puts, you're going to sell a put here, and you're going to sell a call here at the one standard deviation line. You're going to buy, and you're going to put a put position up here. You're going to buy a put here, and you're going to buy a call here. So let me show you how that works. All you do is you're going to go to strategies. Okay. From here, you're going to go to Iron Condor, and these are going to be your default settings. You want your normal Iron Condor to be starred, and you want your expiration to be set at 45 days. All right, or worse, or if let's see here. If you're in between, you can set this to 56 days if you want. 84. Press this button. It'll make that one standard deviation, which is 84% out of the money. You want your default setting for 5 strikes wide because this is a mini golden gecko, especially if you have less money. Click on go. Here's what happens. Okay, so I'm going to zoom out a little bit, and here you go. So what it did is, see, it placed a put. You're selling a put over here at this one standard deviation line right here. You're selling a call right here at this one standard deviation line over here. So you're selling a put here. You're selling a call here. Okay, that's that one standard deviation line. At the same time, red means you're selling, green means you're buying. See, you're buying, okay, a strike $5 apart. Okay, why does I say 5? What is $181 minus 5? It's the 176 put. So you're selling this one, and you're selling the buy put 5 strikes below that. On the call side, you're selling the two-way call, and you're buying a call $5 more. That's what that $5 strike wide meant. Okay, so you do this if you have a this is called a mini golden gecko if you have a smaller size account because you don't want to tie up as much capital. Okay, as you can see here, look, this trade right here would tie up $429 of my capital. I could make a max of $71, and I'm risking only $429. What is 10% of this? $42. So if I hold this expiration date, I'm making almost not quite, but 17 to almost 20% on a return on my return on capital. See that? Okay, now if you want to do a real golden gecko, you're gonna move these call and put. You're gonna move them out to this 2 standard deviation line right here. Okay, that's about 2 to 3% out of the money, just kind of like that. And what's gonna happen is you're gonna look. You can collect more, okay, but you're also gonna risk more. So click on show. And you can see now I'm risking $1,567 to make $133. What is 10% of this? $156. So I'm making maybe 8-9% of my money, in the next whatever so many days, right? That's still, not bad at all. But it's just a matter of how much capital you want to tie up. Okay, that's basically all it is. And you can see this is a 59-day. This is the expiration date. It'll be the December 20th expiration date, which is 59 days to go. If you want to move this down, see where it says expiration right here. Okay, you want to click on this time and reduce it, and you're going to watch this time, and you want to make sure this does not have a W in it. So you're going to watch over here, and you're going to watch over here. So watch, I'm going to move this. See, that's November 20th, but W stands for weekly. You don't want that. Click it again here. So this one has 31 days to go, and you want to adjust these strikes. See how they're off now? So move them. Okay, move them here. This should be roughly around 84% out the money. Move these in like this. See, to the 2 standard deviation line. Okay, now you can see I can collect 82 cents, and if you click on this, you will see your risk tolerance. I'm going to risk $868 to make $82, so almost 10% return on capital there. Okay, with only 31 days to go. It's really simple. For you new people, everything in green is where you make money. So here's where the SPY is trading right now. As long as it stays anywhere in the green money, you make money. You have a 72% chance of making money here. Okay, anything outside of that, it goes red. So see if this goes over here, it'll be red. That means you lose money. That's why Dole is so simple. IV rank is 38% though, so it's not quite 50. So over here, technically, you want to try to collect at least 19.8% of the expected move in the SPY. How do you calculate that? Okay, first I'll clear all this stuff here. Go to strategies, click on strangle. These should be your default settings for your short strangle right here. Make this a star up here. Make this 45 days. This stays the same. Click on go right here. You will see that you can collect $1.18 right here. Okay? Right here. Is that enough? Go open up your Thinkorswim. Go to your trade tab, which is right here. Click on trade. Make sure you're looking at the same expiration. November with 31 days to go. On Dole, it's November here with 31 days to go. Go back to Thinkorswim. As you can see, if you move your cursor around here, the expected move up or down is $7.40. Open up your calculator, type in $7.40, and you want to multiply that by 0.198 to get how much you want. You want to be able to collect at least $1.46. Can we collect that? Okay, you want to collect at least $1.46. Can we collect that here? No, we only collect on $1.18. So which means is you can still make this trade, but maybe you want to try collect a little bit more. And how do you do that? You can try moving your strikes like this to get it close to that. I'm sorry, wrong one. You can try bring it in to click $1.40 something right around here. Okay, or which is pretty close. Okay, or you can either, if you're worried about you not collecting enough, and so you might want to move out you want to move these out a little bit. So here's where we were. Maybe move it out to give you some more padding. You're going to collect less, but you improve your probability of profit. So those are your options. What if you don't have Thinkorswim? If you don't have Thinkorswim, do this. Okay, I'm going to clear this. Okay, well, I'll start from the beginning. If you don't have Thinkorswim, go to strategies, click on strangle, right? Same thing. Okay, but now what you want to do is you want to move in your strikes to make a straddle. So click on this right here and move them in to the right on top. We're trading for 194. So put them right till you get to 194. Okay, so they're pretty much right on top of each other like that. Okay, this is a straddle. What you want to do is you want to take this credit right here, $6.18 right here. And you want to open up your calculator and multiply that by 1.125. I think is a little bit more accurate. 6.18 times by 1.125. There, $6.95 is your expected move, and take that number and times it by 0.198. It's a little bit off. Let's try that again. It's always 6.18 times 1.25. Oh wait, $6.18 times it by 1.25, 7.72. Well, either way, it's close. So it's right there, right about 1.2. That's your expected move. Now you want to do is you want to take this number and times that by 1.198 to find out how much you want to collect. See, it's roughly about the same, $1.50, 10 cents off. So when you go back to the strangle, you can see if that's enough, right? So go to the strangle, and we said dollar. What do we say we have to be? $1.52. We're not quite there